Got Sameer Narayan with us in studio along with our technical experts, of course, this morning. Sameer, good to have you back. Okay, what should we focus on today? We're in the middle of earnings. Let's talk about that first. Yes Bank's the one we're watching out for today. We were just talking to Nikunj about how we're also looking at them talking about possible fundraising. And that could possibly be the pivot for the counter. We saw the way it moved yesterday. What are you expecting?
I think first will be people would look for have the earnings troughed. So in the sense that how does the NII look? What is the loan growth? How is it doing sequentially? So that would clearly give you an indication that yes, now we are across the turn. Secondly, it will be the type of fundraise. For example, if you have just a financial investor or there is somebody who's coming with a possible strategic intent. So I think that will probably give Street a larger measure of confidence about the things really turning around and probably quickly. So right now it will probably be in the rate of change that people want to play here because the stock has corrected a fair bit. So right now one doesn't know as to at what price am I wanting to buy. Is it 0.5 times books, 0.7 times or 1? So the moment you get a sense that, okay, there is a due diligence done, there is a financial investor with a probable strategic intent coming on board and recapitalizing, providing capital, I think that's when the whole growth story can then start building up.
Okay, that's the take coming in on Yes Bank. Lots of factors to keep an eye out on. Meantime, what are you making of Wipro as well? We're going in with very tempered expectations, and the management had made it fairly clear the last time around in terms of their guidance as well. What's the pecking order in IT, and what are you expecting from Wipro?
I think we've got the numbers coming out from Infosys and TCS. Now, Infosys was a very clear beat on the revenue line. TCS was probably a bit lower relative to expectation. I think in Wipro, the expectations have anyway been muted and they've not guided too strongly anyway.
Yeah.
So I think given the fact that it is probably Premji's last swan song as a chairman, so I think probably you will see some amount of forward-looking directions being set because a flat Q-on-Q growth on this IT services revenue line is perhaps just par for course. So it's not as if this quarter has been anything great. But if you look at what has been happening around, like the Infosys or the TCS, the amount of TCVs that they won, so which means there's a fair bit of deal bids that is happening. So maybe Wipro will be probed more as to how do they want to fix the front end, and that is what the analysts would be wanting to get a commentary on from the management.
I want to look at HDFC AMC numbers, and even though we've been talking about a slowdown, a visible problem in the debt market, inflows have become outflows, the one-time money which is coming from HNI investors into mutual fund, that has got challenged. The commission structure where SEBI came out and they've reduced the commission structure by 25 bips, that's not really impacted the profitability of HDFC AMC. They've come out with good set of numbers. They don't have a lot of listed history, but revenue at 504 crores PAT. Now look at that. That's the advantage when you are in this kind of an agency stroke commission based business. 290 crore PAT on a revenue of 500 crore. And this is a business where you don't need to invest. This is a business where the same team which was managing 100 crores now can easily manage 1 lakh crore. The fund managers don't change. The cost of new acquisition keeps on coming down because of system. So this is one of those businesses where if you are really, you can take a view and use the word freely that this is in general a business which is built to last. Now that I've used all the superlatives for the AMC business, let's talk about investors. Do you think investors will make more money buying HDFC mutual funds or buying HDFC stock?
Nikunj, HDFC stock has done...
HDFC AMC stock.
AMC stock has done fairly well in this quarter because I think post the SEBI changes that are coming on into the commission structure, given their size and their relevant dominance in the space, they've been able to clearly pass through the entire thing to the distributor lot. So therefore, they've been able to at least maintain margins. I think that's the reason why people will look for that kind of confidence. So it's a very fortified profit mode that is available. So in kind of businesses like this where you have, let's say, a run rate profit of 1,200 crores, I think a 30 times multiple is a very easy going thing for the simple reason that these numbers you will continue to get growth. And as you rightly said, for them, growth is there for the asking because the moment the penetration increases, savings go up, I think these people will get a disproportionate share of the incremental business. So I think growth having satisfied the problem that what valuation would you want to buy in? Like HDFC Bank. it is always trading expensive. So chances are so will this from the AMC.
Can one just make a portfolio of HDFC Bank, HDFC AMC, HDFC Life and just sit on it for next 5 years? Just think about it. I'm saying something which is simple common sense.
Absolutely.
These are great companies. These are businesses which will exist after 5 years, 10 years. They may be expensive, but then if you want a good asset in this kind of a market where quality is trading at a premium, you will get them at your price.
So if you're looking for a 10 to 12%, 10, 15% kind of a CAGR, I think these are fantastic stocks. So rather than do passive investing, it is better that you take direct exposure to these kind of marquee names. But the problem is that when you're looking for a distress situation turnaround, which probably a larger portion of the economy right now in, so then you need to see the operating leverage kick in, and those advantages you will not get here. So that you will probably get in some outsized stock where you are not being pricing for the growth, and there's a huge amount of op leverage, not unleashed yet. So that is where you will probably get a 2x, 3x kind of a return. Whereas for a 10-12%, these are perfect staples.
My only fear is that whereas it's fashionable to talk about stock picking, and with all due respect to Samir, who's a fund manager here, making money in mid caps and small caps has not been easy.
Yeah, I was just gonna say
it's not been easy. It is for an investor, you always want to really buy that extra small. You want to buy that stock which you think has potential to multiply and become a multi-bagger. But this is not the environment, and this is not the situation where the world is uncertain. We don't have a handle on growth. We don't know what will happen to trade war. We have no idea how interest rates will move globally. To imagine that you can make a basket of a small and mid cap stocks where you will get exceptionally strong returns. I guess for those who've been conservative in last 2 years, they've made money, and more than making money, they've saved money. So in this environment, it is important to save rather than really chase returns. That's my limited point. Absolutely. I may be criticized for this view, but
no, that's a really important takeaway, because actually, if you're putting your hard-earned money into the stock market, so maybe the perception as to what your perception needs to change currently for a retail investor to the fact that you're parking your money there as opposed to that era of astronomical returns, at least for now.
But Ava, the way you look at it is that today the recent returns have been probably say high single digits. But if one was to look at a roaring bull market, or an economy that is perhaps, if we have to aspire to go to a $5 trillion size, so I think that's where you will need a lot of things to fire. So I think from that perspective, you will see certain sectors getting that kind of push where when Nikunj spoke about mid caps, I'm not saying you have to basically be clear as to what kind of mid caps you're wanting to play. Is it in the sub $500 million companies, or is it in the 15,000 to 40,000 crores, which is 2 to 5 billion? I think that is where you will get enough business models which have been proven, and where you will see that when growth comes, there is a large amount of operating leverage that can get unleashed, which is right now not getting priced. So probably that is where you will be looking at opportunities which can give you that kind of name.
Well, we hope so.
And we'll come to you for those names maybe. But Samir, just let's get in a view. You were talking about, looking at opportunities within the mid-cap universe, a strong operating leverage, etc. Is there some sort of a sector or a pocket where you'd find that comfort then?
I think power utilities is a very good asset sector where a lot of things are happening even from the regulatory side. In fact, now we are seeing that even the government is trying to get in place the entire DISCOM policy, where they will be looking at getting the letter of credit first, and then those kind of things which will ensure that the DISCOMs are solvent and they are in a position to pay up for the kind of PPAs that they've signed up. I think those kind of revenue visibility and the fact that you will actually get money for your power supplied, that will give a lot of comfort and confidence to the street to be able to see how these growth will play out in these utility stocks.
Well, for me, the bond story, the fact that where the bond yields were exactly a year ago, they were north of 8%. Now they're sub 6.5%. Markets are not realizing that. Just imagine that if you're looking for a home loan, your home loan will become cheaper. Your car loan will become cheaper. Your ability now to even service that loan will becomes better. These are the bond yields right now on your screen. US bond yield is at 2%. German Bund last week touched in record low. US 10-year paper, you can always borrow at 1%. That means you're almost borrowing money at free. In Germany, if you keep money in the bank, you have to pay interest to the bank. Yeah, I'm right when I say that. That is negative interest rates. So again, we are looking at a situation where not money, but lots of capital is sloshing around in the system, and the capital will have to find some home somewhere. And that makes the debt market in India very, very attractive. So there is no dearth of global liquidity, at least that's my sense, and this time around the debt market could surprise us. Also, second, we've been talking about this point that how do you judge the economy in terms of the demand, pattern. First is availability of credit. Second is the ability to borrow. And third is affordability. So on all count, the situation for an Indian borrower has only become better. The Indian borrower today has the ability to borrow because the retail balance sheet is not dented. Courtesy CIBIL and courtesy where the basic checks and balances are, which is your ability to borrow. Can you borrow? क्या आपको पैसा मिलेगा? The answer to that is yes. B, availability. Post NBFCs, the availability was not there. That availability gradually and slowly is normalizing. And third is affordability. If interest rates they come down, we are looking at affordability also going higher. So that's the other point which I want to make out. And if these three things come together, your ability, your availability, and affordability, the 3 A's like I like to call them, I think then we could be staring at a strong demand revival. Do you agree with me?
Absolutely.
Say yes then.
Yes, there is a fair amount of optimism also built in, because today the 10-year yield, the level that it is showing you is also signaling that people are not wanting to put as much money into the private bonds. So because there is some amount of risk aversion, people are not very sure about the credit risk. So that's the reason why anybody who has to deploy, he is wanting to rather buy all G-Secs. That's the reason why you are suddenly seeing that those bond prices are rallying and hence the yields are coming off. So there, and hence the spreads between corporate bonds is widening. Now, because RBI has ensured that now the liquidity starts turning surplus, so there's money available. So, but that money is right now not chasing probably the private issuers, they are going straight to the sovereign. Hence, you're seeing that yields crack. But I'm saying that once the liquidity is there, the issue is that now government is making all the right noises. You're talking of raising external borrowing or a sovereign bond issue. I think $10 billion is not something which is too large in the Indian context. We used to have earlier Resurgent India bonds as well. Even during Raghuram Rajan's time, we've taken overseas borrowing. So I think that's not a problem. The problem is that today, once the credit is available, like yesterday we had Federal Bank numbers, retail credit grew at 25%. Now that's a very strong number. So I think once liquidity is available, you will find that people will start putting it at decent yielding assets. So I think that's what kickstarts the spiral, and let's hope that it builds momentum.
Okay. All right.
Is there merit in buying commodity consumers now? We are going through that cycle where copper, oil, cotton, cocoa, soya, everything's coming down.
Because if you see what has happened in China, China is typically the region from where the commodity pricing takes its lead. Now, China over the last 2 months, even though the growth has been soft, the data on commodities has been fairly strong. Their fixed asset investment is maintaining at the same rate. At the same time, most of the inventory of all finished goods is actually running fairly high. So that means China is not taking the pedal off in terms of the production of these industrial materials. So I think why is China doing it? One doesn't know. But I think the way the trade war spat is going on, one would probably be wondering that China is also now looking at ways as to how to make the economy more domestic looking, which is what they initially started off with, which is basically pump prime and do a lot of more fixed asset investment, because they have done a fair amount of consumerization. Consumption has become a decent share of their GDP, but now when they know that there is going to be some slack and exports are not going to be there for the asking, maybe they will come back. So I think it could be a signal for all the commodities to start trending up. They have been soft in the recent past, but the future may not be that amenable to the commodity users.
Okay, CK, let's talk about Yes Bank. Now, for those who really want to trade here, I'm not talking about preferences here. I'm not talking about bias towards fundamentals here. For someone who says, look, I don't care about whether the company is good or the bank is great or bad. I want to make sure that I make my 5%, whether it is long or short, I don't care. Is Yes Bank on course to become a 115 or 120 rupee stock?
Well, I think the way it set off yesterday, with this huge bout of short covering and a grand finish for the day, I would definitely believe that 115, 120 figures which you mentioned are certainly up on the boards with a very, very high probability. In fact, I would rate that as a kind of a minimum that it would reach, given the kind of momentum we saw, and it would not surprise me to see it roll on further. There is a gap area on the charts which is a little higher at about 130 to 135. I think that's where bulls, if they are able to corral the game, which they seem to have as of yesterday, if they can hold on to it, I think they'll make for that 130-35 range.
All right, that's the take coming in on Yes Bank in terms of a trading perspective. Samir, how have you read into the commentary on auto? Citi is saying that, yes, there is positive sentiment building up for the festive season. Has the street really unnecessarily punished these stocks? Does the situation warrant all of the alarm bells? Is there going to be a prolonged slowdown or too much pessimism?
I think I want a combination of probably a bit of all, because when you look at from where these stocks started correcting, I think all these stocks it's a cyclical industry, but all these stocks were primed for growth, that 15-20% growth is going to be continuous. So therefore, they all were being given 25-30 multiple. Now you face a situation whereby there is a BS6 changeover, so which means investments have to be made, costs will go up to the end user, and the whole EV investment thrust. I think both these factors are together combining, and the NBFC crisis further accentuated the entire availability of credit, which was probably the last leg standing. I think because of all these factors, there has been definitely some amount of demand that has stepped back. But now, in case the monsoon starts picking up, we've seen the deficit has reduced markedly over the last week. Sowing has picked up. I think that is a big sentiment driver. So the moment you start seeing the numbers starts coming up and the monsoon starts having a more widespread throughout the country, the mood on auto will pick up, at least on the passenger cars, on the two-wheeler side. On the CV side, yes, there is a fair amount of inventory. There is a fair amount of slowdown because freight is not visible. People are not being, in a position to make those investments upfront. So CVs may take a bit of time to recover, but I think come maybe a quarter down the line, we should see some level of pickup.
Okay, that's the view coming in on the auto space. In fact, let's also get you a sense as to some of the top news wraps this morning and some of the national headlines as well to keep an eye out on. Well, the International Court of Justice is going to announce the verdict on the Kulbhushan Jadhav case today. Remember, India had moved the ICJ over egregious violations of provisions of the Vienna Conventions by Pakistan. And unfortunately, the death toll in the Dongri building collapse has reached 14 and several still seem feared to be trapped. The Chief Minister, Devendra Fadnavis, has ordered a probe into the tragedy, saying that the focus is on rescuing survivors. And the Supreme Court has reserved the verdict in Karnataka rebels case for today. The Chief Minister, Kumaraswamy, says that rebel MPs were hunting in packs to destabilize the government. The Speaker says that the future course of action will depend on today's Supreme Court verdict. And here are some of the other news in pictures.
Let's bring up some of the other stocks in focus. I wanted to take a look at Jubilant Food, one of our two stocks that we're looking at today. Saw quite a move coming in yesterday. It may be pre-earnings that we're seeing this buzz on the counter as well. But just to touch upon it, Samir, I'm not sure if you're tracking.
Jubilant Foods is the pizza company.
Yes.
Why would anybody order pizza after the World Cup?
Yeah.
Second.
We're not all as healthy as you, Nicole.
No, but just think about it. What was the USP of Jubilant Foodworks? 30-minute Nato pizza free.
Yeah.
They were giving you pizza on delivery. Swiggy and Scootsie have really disrupted the food delivery market. The USP of getting a pizza in 30 minutes, I think, is gone now. So that edge what Jubilant Foodworks had, I think, is not there. But they moved into Chinese now.
Yeah. They've used Chinese.
So I've not tried it. I've tried the pizza, but I've not ordered the pizza in a long time because I'm getting better options from better restaurants.
So should we wait for them to IPO now?
Well, I think that is one section of the market that probably we and you will not be able to get a share of investing at all, and that's where real value is being created. The Swiggies and the delivery vehicles of the world, because those are real disruptors.
So if you're an investor in the stock, then what do you do? I mean, it's trading at 1269. It's been pretty decent in terms of earnings. What do you think, Nikun? Should I get a chart check from Kunal as well?
It's a great company, Aisha, Abha, in my book, because it throws up a lot of cash. And it's a company which has not been very bad with their capital allocation. People may criticize them for their venturing into for Dunkin' Donuts, but I think they were able to understand that, look, in India, jalebi sells and donut does not sell. So that's something which they were able to realize it, and they did not expand it. We're talking about but you're looking at mass market here. That's something does not sell here. I like the capital allocation. It may not be a stock which I'm very excited about in terms of valuations here, but this is one company which generates a lot of cash. They've learned from their mistakes, their royalty issue. They realized that they were doing something wrong. They took it back immediately. Is there a disruptive force within the food delivery market? The answer to that is yes. But if you're that crunchy, cheesy pizza guy, then Jubilant and Domino's is still the choice in terms of an experience.
Well, you're right. They will have to pivot.
And what is happening is that the nuclearization of the whole family, that today both husband wives are working, so therefore the trend to eat out is more prominent. So that's where that market is continuously expanding. So that's why all these quick service restaurants, everything. I think so there is a huge demand tailwind. But now, as he rightly said, the differentiation that they had, the 30-minute, I think that is probably getting marginalized. So that they will probably cover up by getting better products, because in India it's all about localization and at a price point. So
if they get the Chinese business right, I think the stock can sustain these P multiples.
Absolutely.
But only on the promise of pizza, a P multiple of 50 times, I think it's not going to hold true. So time will tell whether the Chinese has worked for this Indian company or not.
Okay, let's move away from pizzas and food to some of the other stocks that we will be watching out for. And just quickly mark the pre-open rates, given that the trade setup for Asia has been awfully tempered. Yesterday, we did see that sort of a rally build in. Wonder if that's what the ticks are indicating this morning. But in the meantime, Samir, wanted to get in your take on infrastructure. A lot is hinging on this sector now, given the fact that now the big budget event is out of the way. Are we going to see proper orders picking up, and is there any sort of subsector within the infra space that you like?
I think infra has been given a lot of focus even in the budget, and the way we are looking at the leg of Pradhan Mantri Gram Sadak Yojana now kicking in post budget, that 80,000 crore allocation. So I think roads will continue to have been seeing and will incrementally see a lot more money coming in. And within the infrastructure, I think even power and power utilities, the capital goods, the moment you start seeing some amount of capex or some amount of optimism on part of the corporate to be looking at expanding capacity, I think that's where you will start seeing the translation into your order book. As of now, it is not visible, but yes, going forward, can it be? Yes.
But isn't this an extremely long-term and full of regulatory risk kind of scenarios? I mean, I completely understand.
High debt burden.
Yeah, I take your rationale for it. That's the upside. But the downside also is fairly steep.
So that's the reason why now you see the availability of funding is not what now government is looking at. That the moment you start accessing, because there is a saving shortfall in India, so you start getting capital from outside. So therefore, somebody who's wanting to build these assets has access to cheaper capital, and because demand is there, the idea is in what time frame can you execute and what is your gearing and hence your capital structure. I think if those two metrics are there, there is enough tailwind for the sector, because demand is definitely not a constraint. As we are rightly saying, even in Bombay, the whole coastal road issue, I think all of us, when we commute, we know that we all need it. But unfortunately, that there has to be something that has to be done properly. Regulations have to be done, your environment studies have to be there, funding has to be proper. So all that things, everything has to fall in place. So as of now, since you asked, I think power utilities and power sector things are falling in place. So soon, I think government will take up one sector at a time.
Okay, and that is very interesting, because that's a problem that we've been discussing for quite some time. But Kunal, curious, within the cap goods stroke infrastructure space, what is it that you're spotting on the charts?
So I think L&T is still one of the stocks which I believe is one of the bellwether. It's one of the favorites. It's been doing pretty well, very high correlation with the Nifty. But there are the mid-cap stocks have shown mixed signs. I think NCC was one of the few names which showed early signs of potential, but post that sharp correction which the stock saw in the month of June, when it fell by 10-12% on the back of some orders from Andhra Pradesh, etc. I think post that the trend has reversed for NCC, and most of the other infra stocks on the mid-cap sides, as well, they have reversed their trends. So there's no clear trend which is emerging into the mid-cap names. It's only the bellwether like L&T, which has been doing exceptionally well for itself on the longer-term charts across various time frame. I'm not talking of just the last 1 month or 2 months. I'm talking of the last 2.5 or 3 years, right from 2017 onwards. So I think that's one stock which I believe could continue to rise up higher, and I think at current levels as well on L&T 1450 plus, I think it offers a very good trading buy as well.
All right, that's the take coming in on L&T 1464. By the way, the pre-open rates on Yes Bank as well were indicating that it's going to be a fairly heady day for the stock yet again. But in the meantime, let's also understand the overall setup. Lots going on with bond yields, our own market seeing a spike. Market Masala and Nikunj is standing in the thick of the action in the midst of our newsroom with the details. Nikunj.
Well, time for our morning masala segment. In case you've just tuned in, what is something which you should be focusing on apart from stocks and in terms of big trends? So in a morning masala segment, we'll try and pick up on a daily basis 2, 3, sometimes 4 topics which could really impact your portfolio today. First, everyone's talking about the bond yield, the sharp crack in bond yield. So I'm just going to put some context here just to give you a flavor of where exactly are bond yields headed, where bond yields were, and what exactly are bond yields telling you. So this is how central bank policy action was, and this is how central bank policy action has changed. Now focus here. When we started the year, Reserve Bank of India, a neutral stance which has become accommodative. Fed, everyone thought that Fed would either increase rates, but what are markets now factoring in? 2 rate cuts by the year end. And then German bonds, which were giving positive returns to investors. Now the yields for German bond, they've turned negative, which means that in Germany, you have to pay money to the bank. And if interest rates are negative, that just tells you that again, there is excess capital and there is a fear of big slowdown. This is how the 10-year, this is how the major bond markets or major sovereign bonds are currently pricing in. US 10-year paper is almost at 2%, That's incredible. German bond, it's come back into negative territory once again, and then Indian 10-year paper, which was at about 10%, which was at about 8% plus, has now come to levels of sub 6%. So the point I'm trying to make here is that globally and locally, everywhere, the 10-year paper now seems to be correcting. So decline in sovereign bond globally, in my book, seems to be the factor which will influence the way how P multiples would expand and the way how markets would be pricing in equity as an asset class. And you've got a comment coming from Neelkant Mishra on the same lines. He seems to be indicating and suggesting that a monetary rate cut is coming, and affordability and a monetary stimulus essentially would increase the demand. So in the second half of the year, because bond yields are coming down, markets could be in for a very sharpish demand recovery. But that's the bond market for you. The big story today is Yes Bank. So we mapped some data on Yes Bank just to establish that how things have changed for Yes Bank after Rana Kapoor's exit. And after Rana Kapoor's exit, the Yes Bank stock has taken a knock of 70%, and during that same period, Bank Nifty went up by 10%. So you can imagine the change which has happened in the stock price of Yes Bank, which has given you a underperformance of nearly 80%. The ratios also for Yes Bank after Mr. Kapoor's exit, they have plummeted. Growth has slowed down and NPAs have gone higher, which means the bank right now is in a corner. But my colleague Ajay yesterday broke a great story on Monday, which is that even though Yes Bank is coming out with numbers today, we should be expecting a capital infusion. So morning Ajay, what are your sources telling you?
Well, that's correct, Nikunj. We have gathered that though the spotlight today is mostly about results, but the street actually will be watching out for the announcement on growth capital. We broke the story that they've received a firm term sheet by one of the leading private equity, American private equity giants.
The
for
current
$850 million.
price to book of Yes Bank is almost that of a PSU bank. So for a private equity investor who understands the risk, this could be a good proposition to invest in.
Well, that's correct, Nikunj. They are they look for a stressed asset. They have a 7-8 year view, and this is the baddest boy right now on the street. So the profile of the investor is who could take that kind of a bet right now, because public money is just shunning this particular stock right now.
Okay, so Yes Bank numbers But the most important announcement is that can they really raise capital? If indeed Yes Bank today is able to give a sense, a flavor, a view, a promise, an indication that yes, a private equity investment is coming, that could be a mini re-rating for the stock, which already has seen a run-up of 10%. Markets are not so excited about what they've done for the quarter gone by or where the book is moving, but are they able to raise capital and growth capital in this kind of an environment where markets are simply hating that stock? So bond yields, one part of the story, Abha and Avan, and Yes Bank numbers, stroke update on capital raising is going to be the most important point from a market curiosity standpoint, at least for the day.
Going to be the big pivot, and that's going to be a stock to certainly watch out for. In fact, let's take forward that morning masala then with our guests in the studios as well. And Kunal, you were talking a little bit about some interesting delivery data, and give us a sense as to what the indication is on the stock.
So, what transpired yesterday were two segments: cash, the stock price in terms of the delivery on NSE/BSE, and then the F&O segment. Now, the cash price, the delivery volumes yesterday were almost 4 times the average over the last 5 days. Earlier the average for delivery volumes were almost 60-62 lakhs. Yesterday it was 2.7, 2.8 crores. So it is almost a 4 times increase in the delivery volumes, which is staggering in terms of the cash segment numbers. Then you try and look at the F&O segment and whether there is a similar sort of an OI built up. So the volumes, the trading volumes were almost 2.5 to 3 times on an average over the last 4-5 days for Yes Bank, and you generally expect that the short covering would be of similar magnitude, or open interest built up would be of similar magnitude. But we saw only a 6% rise in open interest, which means it was led purely by very strong short covering yesterday in terms of the F&O segment, and compensated by very strong buying in the cash segment. So these are very strong data points which a trader should be looking at, because this is not just a trading stock, which I believe the stock could be going through now. It could probably open up further legs of strong upside from current levels.
Okay, that's on Yes Bank then. Okay, so that's the call coming in from Kunal, and we were speaking to Sameer about Yes earlier as well. And we've been looking at a whole host of other names that we're going to be tracking as we head into trade. We've been talking about auto. Yesterday we saw a bit of a move on Tata Motors as well. Not sure if there was anything in particular that drove that, but it did close on a higher note, and Maruti in focus today as well, with some brokerages anticipating that perhaps the festive season will help to see a pickup on at least some of these names. The other pocket that we've been looking at is pharma. Sameer, let's talk about that, because really mixed reports that are coming in. We all know the vulnerabilities on the global side, but even on the domestic front, there's a lack of conviction on whether the market will rebound sooner rather than later. So within the back, are you looking at it whether as a defensive bet or just as an opportunity? And if so, would there be specific names or a strategy you'd look at?
Now, I think pharma has seen a massive underperformance over the last 2-3 years. So today, if you see, most of these stocks relative to the benchmark are quoting at substantial drawdowns. So therefore, one is trying to see whether is there some growth leg that can probably start getting priced in. But at least on the near-term visibility, there's not much to be offered. Because even today, let's say a Sun Pharma is still 20 times FY20, and the growth, if it comes back, it'll probably be in FY21. So it is, as of now, a leap of faith. But yes, because the sector has seen a large bout of underperformance, there is a fair amount of under ownership. That's the reason why one is looking at it in the context of, can there be some amount of absolute returns that can be made? But I think if the way things are for the INR, I mean, everything is happening for a stronger rupee. I don't think that these, mostly all large companies are export-driven models. So these people will have a lot of, tailwind or support from the export earnings. So I think on the near term, earnings may not be as robust as even today current valuations discount. I mean, 20 times is not exactly cheap. It is probably in line with the market multiple.
Okay. CK, in the pre-open session, the market is telling you that we could be in for a gap up start for Yes Bank. Let's address the trader once again, CK. Do you think a trader who frankly does not care about who runs the bank and what are the NPA levels are, he's looking for his 5% trade, can Yes Bank oblige once again?
Well, I think, the wide gap up that you're seeing in pre-open is a little bit of extra enthusiasm perhaps, and I don't believe we are going to see Yes Bank open at those levels. Market men are not fools, particularly when it is a day of an event. They would probably want to wait for some indication that things are along the lines of what expectations are running at. For sure, more than today's results numbers, people will be looking at some revelations or clarifications on the capital infusion, and that's not that's not a foregone decision that people can open the stock at a gap up. So the fact remains that Yes Bank is a play. It's a play from the long side. I think plenty of short covering is still left. A lot of new bottom fishing buying has yet to happen, but then bottom fishers will all wait for some sort of affirmation by way of facts, or at least some sort of tangible indications. I think so. This upside gap which is being indicated, I don't think that will last.
CK, thank you for that. Well, as we walk into trade this Wednesday morning, what are we staring at? Well, we are staring at a world where trade fear has erupted again. Just when we thought after the G20 summit that the Chinese and the Americans were friends, I guess US President Donald Trump's last night comments are clearly indicating that the trade war fear is back. That's one part. Second, there is definitely a trend which markets are not realizing when you look at the bond yields. Bond yields are almost at demonetization levels. That means the cost of borrowing becomes lower. What drives credit in any economy are three factors. The first is affordability, the second is availability, and the third is your ability. So on all the accounts now, I guess the loan borrower will find it easy to borrow because of availability and because of affordability.